Yes, people, welcome. My name is Saleh Alminji, CEO of Icon Traders, and welcome to the second episode of the Icon Traders Weekly Catch-Up. In today's episode, what we're going to go through are all the episodes that we looked at, all the currencies that we looked at last week and how they progressed over the period. All the major events that occurred last week that could have had an effect on the markets, and then we're also going to look at predictions for this week because it's currently Tuesday the 19th of March, and all the major events that will be happening in the world that could affect the markets and what potential effects that these could have. But starting off, we're going to look at last week's events. So, last week, on Monday, we had, for the US dollar, there was core retail sales release. So, this figure shows us the either growth or decline in the value of retail sales sold in an economy. In America, this is released every month. 14 days after the month has ended. So for January, the figure will be released on the 14th. Just like for February, the figure will be released on the 14th of March. So on Monday, it was predicted that the figure would be 0.4%. However, it saw a total growth of 0.9%. Now, when we look at the charts, as we can see here on this candlestick, this represents the effect that this had in the markets. On Tuesday, there was a release of GDP, so for the British pound, so GDP release. It was predicted to be 0.2%. However, we did see that it was actually 0.5%. Now, this was quite a lot greater than what was expected, and for this reason, there was also a relative effect in the price of the pound. Now, these reactions are, although they do have an effect, they normally aren't long term because these figures are released every month. So please bear that in mind. Also, last week, Tuesday, there was a vote in the House of Commons for whether they are going to accept leaving the EU without a deal or ask the EU basically for an extension. If there's an extension, then we will leave the EU on the 30th of June. If not, we're leaving on the 29th of March, which is very soon. We still have no deal. Let that sink in. Wednesday, GDP. So what happened was the House of Commons basically rejected that they wanted to have no deal. Basically, they said no, we can't leave the EU with no deal because that would be ridiculous. So finally, some sense coming from the people running this country. So that vote was passed on the Thursday, and now what we're waiting for is the EU to discuss and tell us what they are thinking about this and whether or not they're going to accept it. But we'll get to that in a bit. Friday, unfortunately, there was a mass shooting in New Zealand. So what happened was a man decided to go into two mosques 3 kilometers apart from each other, and he shot and killed 49 people and injured 48 people. Our condolences go out to everyone involved and all the families. It's quite sad actually. Don't understand why people do these things, but you know, this is life. So now moving on. Those were all the events that happened in last week, and now we are going to go on to the currencies and how they progressed over the past week. So basically, this is where you can test if I was right. So, USD MXN. Now, with this currency pair, we can see we've got an uptrend and it's within a regression trend. So, within a channel, basically. Now, what we can see is the past two candlesticks on the week chart showing that they're reaching down to the bottom trend line in this channel. So they're going to basically test the support line. Now currently we've got our stop loss at around 18.65. So right now my current plan is, once it starts getting around 18.75, that's where we're going to start looking to short it and close the open trade currently. And if not, and it bounces back, hits the trend line and continues in the regression uptrend, then we just keep the same position open and keep the same take profit of around 20.5. For EUR USD, we can see that since we predicted a sell, it has followed what we thought would happen. In the past 2 weeks, however, we see that it has risen and it has hit some resistance in the markets, but now it is currently at a peak, so one of its highs within this downtrend. So at this point now, what we would be expecting to see is a reversal and for it to continue as a sell. EUR NZD, very similar to EUR USD. That reason being because, you know, they both have the same base currency. So we can expect to see the same sort of thing, and that is what we can see. Here we can see that it fell to around 1.65. and it has a peak here of around 1.66. So what we would be expecting is a channel within these two periods. So at this point now, what we would be looking out for is a breakthrough of either 1.65 or 1.66. CAD CHF. Now, sorry, it just looks quite beautiful to me. This is basically, it has fallen perfectly into the triangle trend, just as predicted, and we can currently see that it is below, so earlier on today it did spike above the Ichimoku cloud, but has returned to below the Ichimoku cloud and seems to be all on course. So we can keep our take profit here at around 0.73. USD CAD. Now this one did fall rather close to our stop loss of around 1.32, but if we look in on the 30-minute chart, we can see that the same thing that happened to CAD CHF also happened to USD CAD. No points for guessing why that happened. They both have Canadian dollar in it. So we can see that there was a spike away and it did come quite close to our stop loss, but has now returned and is quite close to crossing back to the top of the Ichimoku cloud. The past two candlesticks showed us that there was some resistance in the markets, and if we scroll out as well, we can see that at that rate of around 1.348, going back, it has previously, the precedent for this price level has been set. So not too much worries here, especially because this current candlestick that we are at now is seeming as it's going to form a hammer. So going to watch that and see with the 30-minute chart as well. Today there was quite a large spike down to around 1.3325, but it seems now the candlesticks are coming back to above our Ichimoku cloud. Conversion line has also crossed on top of the baseline again, so things are looking promising. USD SGD, US dollar Singapore dollar. So with this as well, the past 3 candlesticks, with the past 4 candlesticks, you can see that it was not really following the trend that I had predicted. However, when we do dive into the 30-minute chart, we can also see that it has broken above the Ichimoku cloud. So at this point now, this would be the time to close this trade, because there is no point in staying in any short position once the candlesticks have risen above the Ichimoku cloud. With EURCAD now, we've got a regression trend on the week chart here, but also if we take the time to zoom out a tiny bit more, we can see that there's an even greater regression trend that we can see. Now, the smaller regression trend is showing an uptrend, and the candlesticks are currently in the middle of the uptrend for this. However, in the larger regression trend, it's showing a downtrend. So this is currently a currency pair in which we at this time wouldn't really be looking to continue trading, simply because of the complications that simply because of the conflicting views that we can see. Okay. So moving on to last week's events. So during the course of last week, we saw in relation to the US dollar, the US dollar had their core retail sales released. Core retail sales, this shows you the total value, the total change in value of retail sales within the economy for the past month, the previous month, and they're released and the numbers are staggered. So for January, the results for January will be released on the 14th of February. In February, the results for February will be released on the 14th of March, and so on and so forth. So for last week now, Monday, we did get a release. There was a prediction of 0.4%, a 0.4% increase, and there was actually a 0.9% increase. And if we look back to the charts of last week Monday, USD, MXN, we can see that this is reflected in this on the charts. Moving on. On Tuesday we saw that the GDP monthly keep forgetting words. The GBP, British pound, GDP, gross domestic produce, statistics were released, and there was a prediction of 0.2% increase. However, we actually saw a 0.5% increase. And when we do look over on the GBP chart, so if we come over to GBP AUD, and then from now we can also look through them as well, so look through all the GBP pairs, and we can see that for last week Tuesday, the release, or the positive release, which was even greater than the predicted 0.2%, is reflected in the charts. Wednesday, there was So moving on to Wednesday now, there was a vote in the House of Commons, and they voted to see if they would be accepting leaving the European Union with no deal, or asking the EU for another. Let's go again.
Don't feel like you need to use complex terms and that. Just talk. That might be easier. Say like no deal Brexit.
Okay, basically. So for Wednesday, there was a vote in the House of Commons. Now, them I wanted to see if they would go to the EU and ask them for an extension on their Article 50, which is the document that basically they're going to look at and use to decide the terms of the deal when we are leaving the EU. So what we did decide is that we are going to go to the EU and ask them for an extension. And this extension is going to be confirmed in the EU summit, which is going to be happening from the 21st to the 23rd of March, very shortly. At this point now, we still have no deal. Yeah. 2 years. So, moving on to Friday for last week. Unfortunately, there was an attack in New Zealand. Two mosques were attacked, and a shooter basically went in and shot and killed 49 people and injured 48 people. Our condolences go out to everyone affected by that. Now moving on. So, although some things have happened, we need to look forward and we need to prepare for the future. Today's Tuesday. There's also been another vote on whether, I'm not going to speak about Tuesday. From tomorrow, there's going to be a release, or from tomorrow there's going to be the employment change figures released in relation to AUD, so Australia. Now it is currently, right now, it's predicted that it's going to be an increase of 15.2 thousand. So that's the number to beat, really, if it's going to be a positive one. But so just look out for that and see if the number is greater than that, then most likely there will be a positive reaction in the market. And obviously, if it's worse, genius. Thursday is going to be the 21st, and that's when the EU summit will begin. In this, the EU are basically going to meet up and they're going to decide on whether or not they want to accept the UK's plea for an extension. If an extension is given to the UK, then the new date for Brexit will be the 20... I wrote this shit down. If the plea is accepted by the EU, then the new date that the UK will be leaving the EU. If the EU, so basically, if the EU accept this deal, this plea for an extension, that means that we will now have until the 30th of June to negotiate the terms of Brexit, which we have now had 2 years to do. If not, and they turn around and say that, you guys have had enough time, this is ridiculous, then we will be leaving on the 29th of March, very soon. Still have no deal, bear that in mind. Looking forward as well, for all the currencies that we're looking at, if you would like to see what our predictions are for the next week, you can go over to TradingView and view all our predictions there. Also, last but not least, if we just look through the commodities that we were looking at, we can see that with gold that we predicted to be in a triangle trend, we can see it's still within the triangle that we set out, still within the parameters. However, the last 3 candlesticks have risen to a line of resistance, and this line of resistance, as we can see when you scroll through the charts, there has a precedent has been set in the past, so we can trust this line of resistance, and we are still holding a sell position on this one. Natural gas as well, NTG USD. Moving over to this one, the candlesticks have just broken below the Ichimoku cloud, and it seems as if they're testing it once again. Strong resistance area, and once it breaks through this resistance here, it shall continue to go to our take profit, which is set at 2. If you have any questions, please feel free to ask, message, all that stuff. Any suggestions as well, you know what to do. If you would like to learn the strategy that I'm using in order to predict the charts, then you can go over to Icon Traders, the link will be below, and sign up to our course. Don't forget to like, comment, subscribe, and yeah, what are you still doing here? Go do something great with yourself. Keep shining, man.